Xmoon Training Part 4 Pivot and its various types. What exactly is a pivot? In the Xmoon strategy, any distinct peak or high or any clear trough or low that forms on the chart is designated as a pivot. The magnitude of a pivot is determined by the distance between two consecutive peaks or two consecutive troughs. It's natural that the greater this distance, the more robust and reliable that particular pivot is considered to be. Or, to put it simply, peaks and valleys are your pivot points. The distance between them determines the size of the pivot, and the larger that distance is, the more reliable it becomes. Types of pivots in Xmoon. Within Xmoon, 4 distinct types of pivots have been defined. In the Indicators settings window, we can specify in the Pivot Size section, specifically the Pivot Size pattern, which pivot sizes should be used for identifying and displaying divergence patterns. In the premium version of the Xmoon indicator, you have the ability to activate all 4 pivot types simultaneously, allowing you to view all patterns in one place within that very same indicator. However, with the standard and free version of the Xmoon indicator, you are required to add the indicator separately multiple times onto your chart, and each time you must select a single pivot size. As we previously mentioned, in Xmoon, 4 distinct types of pivot have been established, which, ordered from the smallest to the largest, are super minor, minor, mid-major, and major. The crucial point here is that the larger the pivot becomes, meaning as we transition from a super minor to a major one, its reliability significantly increases. However, the quantity of signals it generates tends to decrease, yet these signals are considerably more dependable. Conversely, smaller pivots tend to provide a greater number of signals, but this also means there's a higher probability of encountering market noise. Therefore, selecting the most suitable pivot size is essential. The selection of the appropriate pivot size is entirely dependent on our individual trading personality. There are 3 crucial factors that we absolutely must take into account. First, your specific trading style and the expected number of signals you anticipate receiving. Second, the particular type of skill and the overall trading experience you possess. Thirdly, consider your personal risk tolerance level. If our chosen trading style is short-term or involves scalping, we typically seek out a greater number of trading signals, possess the crucial ability to make rapid, instantaneous decisions, and consequently, our personal risk tolerance is also quite high. In these specific trading scenarios, smaller pivot points, such as the super minor and minor levels, are generally much more suitable and effective for our strategy. But if our trading approach is long-term or swing-based, our primary focus shifts to the quality of the signals and maintaining mental tranquility. In this scenario, we depend on more in-depth analysis, greater trading patience, and a moderate level of risk tolerance. Therefore, opting for larger pivots such as mid-major and major proves to be a much more intelligent decision.